Compass Global Markets Weekly Update. I'm Tony Boyajian. Well, the US Senate has finally passed the tax reform bill, which is now expected to provide fiscal stimulus to the US economy, boosting growth and inflation outlook. Now, we've seen the resultant strength in the US dollar. We've seen increasing yields and also in bank stocks. The House of Representatives and the Senate now, they've got two different versions of the tax bill. They've got to come together, reconcile their points, and then pass it on to President Trump for his signature. I still expect the tax reform bill will not raise economic growth in the United States. It will only add to the burden of the public debt situation. Look for a watered down version of the US tax plan over the next few days or possibly weeks. Especially keep an eye on the company tax rate and see how much of that they can actually afford, whether they cut it from 30%, from 35% to 20%, or from 35% to say 28% or something like that. The prospect of US tax cuts have been the driving force behind this incredible bullish run in US equity markets, but the market tends to buy the rumour and sell the fact. So it'll be interesting to see in the new year if the market positions itself to take advantage and take some profit from the equity market, especially as the middle class in the United States gets squeezed to try and pay for some of these tax cuts that they've implemented. The Federal Reserve's favoured measure of inflation, the PCE deflator, came out last week. It was once again as low as expected, around 1.4%, well below the target of 2%. However, the market is still fully factored in a rate rise in next week in the United States. The market now also contemplating with this tax reform package whether there will be another 3 to 5 more rate hikes over the next 2 years. So interesting times definitely ahead. Former US National Secretary Michael Flynn has been charged with lying to the FBI. The market's asking some really good questions. Will this lead to further investigations? Will it incite further issues for the President, Donald Trump? I'm sure it'll all work out quite well. We've seen the Aussie dollar originally fall yesterday down towards 75.5 US cents as the US dollar rallied. It's retraced a little bit higher today on the back of iron ore prices strengthening. Iron ore prices strengthened 3% overnight, and over the course of the past month it's actually increased by 22%. It's moved from 58 US dollars a tonne to where it is now around 71 US dollars a tonne, and this will help support the Aussie dollar. Another thing helping support the Aussie dollar is today's release of October retail sales figures. It came in at 0.5%. It rose by 0.5%. The forecast for it was for a rise of only 0.3%. So that'll bode well for the Australian dollar, helping it push above that 76 US cents level. Now, tomorrow, the 6th of December, Wednesday, we've got the third quarter GDP figures coming out. Keep an eye on that. That will be a real litmus test for the market. We're expecting the forecast to be around about that 0.6 to 0.8% level for the third quarter. Look, elsewhere, the sterling pound continues to remain hostage to the Brexit negotiations. It is anticipated that this agreement around the divorce bill, the EU citizens' rights, and how the border will be managed between Ireland and Northern Ireland will gather more steam as the EU summit approaches on the 15th of December. Don't forget to watch our weekly market wrap at lunchtime on Thursday on Sky News Business on channel 602 for all the latest happenings and understandings. We've got the RBA board meeting also out today, so watch out for some extra news. We expect interest rates to stay on hold for the 16th consecutive month, and the Australian dollar to remain in that 75.5, 76.5 US cent range. Have a great week. Thanks for watching.